Hey everyone, Fatty from Pack a Punch Traders here. Gonna make a quick video lesson. Probably not quick, might be a little bit longer. Just going over piecing everything together that we look for. I know I have a bunch of video lessons out there in little small bits, but nothing is kind of bringing it together. Just want to have something like that out there, how we look at plays and what we're looking for before we pull the trigger on a stock. So, I got this little list here. I might be missing a few things, but off the top of my head, this is what I really look for. And it's not in a specific order right now. But what we're really looking for, what I typically talk about in other videos, is supply and demand. What's the float? What's the volume? I usually like to have a low float play because it doesn't require as much demand as other plays that have a higher float, a higher supply to move. And sometimes these not bigger floats, but not super small, like RDBX here, a little over 10 million. Sometimes you get something like this, 32, 33 million. And as long as it has the insane moves when you get the insane demand here. And it's all buying, majority buying. We rotate the float multiple times over. And even on this day here, had a fantastic move. What was the volume? It rotated it about twice. Didn't have as much as a move as it did here on the volume bar, but still, a lot of demand is coming in. So keep that in mind. And then I also look for the market cap. I typically like smaller market caps. I like these cheaper plays that are usually smaller, that move quicker. They're a little bit more volatile. Not that larger market caps can't do that. Just the odds of them doing it it's not happening as much as these lower market caps. So I stick to what I know, what I've made money off of, and something bigger will have a harder time growing faster as something small. So that's kind of the thinking behind that too. So I stick to smaller market caps, and then we got the exchange. It's already filtered out usually in my scanner, but sometimes I'll get something that's not what I typically trade. Sometimes an OTC will pop up, and I don't trade those. New York Stock Exchange, almost never. Amex, almost never. Just sticking to NASDAQ stocks. And then we got news or catalyst. Sometimes you get these crazy moves pre-market, like we got here from VLON. You'll have some news going on beforehand that's bringing the attention to the stock. And sometimes it's not a PR or something. Sometimes you just have a simple catalyst of it's a breakout. It's in a hot sector. Doesn't always have to be some internal news coming out that's changing something with the company. Sometimes it's just a technical breakout is happening, and that's attracting a lot of attention. And that lead goes back to having volume. So these two kind of go hand in hand. Sometimes there are plays that are moving without a catalyst at all, a little bit more sketch, but I definitely like the ones with some news behind it. And then what do we got? Pattern. Yeah, pattern. Stick to what you know. Have the data on a play before you're going to trade it, or else you're gambling. If you have the data, you know how the play moves. If it doesn't work out, it's okay. That happens. There's nothing that's 100%. You're just trying to line the odds up in your favor. And that's all you could really do. Especially if you have a high odds pattern that's working 70-80% of the time. Stick to it. It's okay if you lose 20% of the time. If you're adjusting your size and risk accordingly, you're going to be fine. You're going to definitely make more money than you lose. So stick to a pattern that you know. My favorite ones: multi-day bounce, multi-day breakout, open price play in the morning. And I found that pattern from at first looking at the pre-market high break, and I realized I could get a better entry if I start trading the open price. So I started tracking that. And then late day, I got a VWAP reclaim and high day break. I just got a couple plays in the arsenal that if I see something familiar, I'll attack. And then an important one here, trend. and key levels. How do you recognize these? Let's go to an example here. RDBX. We'll take this one for example. Because I was trading this one here in the 290s. And what made me do that was recognizing key levels. So I knew we had a key level up above in the 360s. And we just broke over this key level here in the 230s. And there's key levels intraday on the daily chart. And the longer it is a key level, the stronger it is. So that's why daily level chart, or yeah, resistance and support on the daily chart, usually a lot more of a key level than intraday levels. Because what we're looking for are the volume in these key areas. That's what, to me, makes it a key area. This actually might not be the greatest example. Let's go to HCDI. HCDI here. We had a trade on this on Friday. We got a 260 breakout. We got a double top. So I'm looking for what makes a key area. How many times is it touching the area? If we're looking for resistance, how many times does it get close or touch it and can't break past it? Or if we're looking for it as support, how many times does it try to break it or break below it or top it, but it can't quite do it and it keeps holding up? And you got to combine that with also how long it's been a key level. For example here, I'm looking at the day low here, the 230s, a lot better key level as the one here, as this higher low in the 240s. And why is that? To me, that is because excuse me, this area simply held for longer. At first, obviously this changed because over time you can recognize this became the key level. You see how it came back here and it held it. So we're looking, how long does it hold the key level? What's the volume around these areas? And as well as how many times does it try to top that area, or is it right around the area? So that's usually how we recognize key levels. As you can see here, from the daily chart, the 260 area is pretty key because it makes it a key area here intraday as well. It keeps trying to break around the 260s, but it can't quite do it. It had 1, 2, 3 tries. So now, not so convinced this thing's gonna make a move higher because we have a downtrend. We got these lower highs continuing lower, and same with the lows. They keep heading lower as well. Lower lows and lower highs. So we got a backside trend, and we also have a key level that's having a really hard time breaking. Now, if it comes back and gets above the 260 area again, I might put it on radar for it to come back to the 280s, 290s area. Because now the expectations are broken, and this is going to become support maybe. So, might be a bit an extended explanation of recognizing key levels and trends, because with trends, all we're really looking for is it making higher highs, making higher lows. Here, like I was just explaining, we get the top, but from there, it can't break it. This is a key area of resistance as well, because it can't break it, and it hasn't touched it the whole day. It just retreated all the way back here. And you get this lower high, starting the trend lower, and with all the volume that's going up here, I know a lot of sellers are up at this area. So that's what's also making me recognize the 280s, 90s, 3-ish area having, being a key level, because just as I mentioned earlier, the volume, how long it's been since it's really come back to that level and tested it as well. So we'll definitely make more videos going over that. I feel like I kind of butchered that explanation, but I hope it was useful to anyone out there. But yeah, trend, just looking for the lower highs or higher lows, and key levels, looking for the volume at these levels, how long it is at these levels, how long has it been since it's come back to that level. That's what shows how important that area is, that price. Next up, we got level 2 and time and sales. Those I don't weigh on, honestly, too much. I use level 2 not the whole time. If I'm in the middle of the trade, I'm really focusing just on the trend and the pattern and letting that guide me. And if it breaks a key level in the chart, I'll think the chart is broken. So here you have the uptrending continuing. And here, what happens here is it finally breaks the trend. So if I didn't sell into these pops, I would definitely be selling on this crack of the 270s because now the trend is broken. It's reversing. We have a lower high and it's failing to keep holding up and making higher lows. So I would definitely be using the level 2 in times of where it's not after a spike, a little bit towards the end of the spike. You'll start noticing more selling come through. I really kind of use it as an indicator to judge tops and bottoms when we're spiking or dipping, because you will get an idea of, okay, now the buyers are coming in, supporting it. And you could also see it with the time and sales, how many green trades are pumping through at the time compared to the red trades. So I'm not weighing on level 2 the whole time, because then you'll get faked out. If you're looking at it minute for minute, it's not always looking pretty. That's why I just focus on the overall trend and the pattern. And as long as the trend is intact, I will stay in the trade. Or if it reaches my goals, I'll get out. So in this case, it reached my goals and I got out, seeing some toppiness action around a resistance level. If we go onto the daily chart, we got some resistance in the 290s here, 3-ish area. So going back to key levels, that's why I was selling around 3, and that's why I was buying in the 260s, because you got it holding VWAP, which is showing that it's above the average price of the day, and you got the continuation of the trend making higher lows. We're holding the previous high daybreak, 255, right around it. Remember that we say it's not supposed to hold an exact price, it's more of a zone. Then you hold 260, it just comes right back, makes a higher low here. Volume starts coming back in. I'm thinking, okay, this thing's going to start moving. It was really choppy, and for that reason, I didn't look at the level 2 that much and just stuck to the trend and try to read the volume and compare it to the price action. And we'll get into that in a moment. That's up next. And once I start seeing a lot of selling coming through near a key level, a resistance area, I might think that area is going to be either a short-term or long-term top. And I don't want to find out if it's going to be short-term or long-term. I could always rebuy if it's short-term. So I take my quick gains and I lock them in. And that's that. So that's how we kind of use key levels in the trend. And level 2, I know I kind of brushed up on it, but I really just use it to see in key moments if there's a lot of selling or buying that's coming in. Besides that, during the move, I just focus on the trend and let that guide me. Next up, price action. This one kind of goes in with volume. Price action and volume are probably the most important aspects that I see in trading. When you combine the two together, you can really get a good understanding of what the psychology, not really the psychology, but the momentum is in the stock. And a good example with this one for that would be CYN. Here's CYN. As you can see, we got some choppy moves. Every time it had a quick move or uptrend, you get a kind of an aggressive pullback. But one thing you got to recognize with these pullbacks, you got to recognize the volume, because for a play to be meaningful, or a move to be meaningful, the volume has to line up with it as well, or else if there's not a lot of volume There isn't really energy behind the move that's happening. It could just be a fake out. It could be manipulation. It could be many things. But you do have the overselling here, but you don't have the overselling in volume. And it continues to hold the trend. And that is the reason why in this case here, I was still able to hold. Because here I learned my lesson. We got this aggressive selling on some strong volume, and that did scare me. But once we got to support here, tried making a double bottom around the 230s, but if we broaden the trend, it's making higher lows from the low 2s to 220, now the 230 area. So it's trying to make a higher low, and you can recognize that because the selling disappears. Now it's near an area where they could possibly tank it and break the trend. But what it does, the selling is it holds up. The selling disappears, and that leads to some buyers coming in. And I learned my lesson from selling quickly here into the weakness. And in this case here, I recognized that the volume really wasn't there behind the move, and that led it to another push. So price action is definitely important because it also takes you out of headache plays. Like for example, CYN and HCDI, they're very choppy plays. They have selling going on each time it tries to head higher. I really like the clean plays that move very smoothly, one-sided. As we can see here, one-sided move. You get the hold here, higher low, continues holding the trend, holds a key level of 7.5, and shorts just get squeezed for $1.50, all within 10 minutes or so. Compared to something where I'm in HCDI for 10 minutes and I'm making just about 10%, and it's an exhausting move. I trade SEV the other day. I have a video lesson on that if you go back on YouTube just last week on April 20th. I'm seeing that, it's one-sided, and I see that with the history here. That's the next lesson, the next thing that we look at as well. History kind of helps show its action. I'll get in that in a moment, sorry. Got a little bit distracted, but I like these clean moves, and you can kind of judge the play already by the way it's acting. Like here, it was a choppy morning already, and there was a lot of selling going on, each moment higher. So that makes me think, can this play continue if there's already so much selling at each step higher and the sellers aren't disappearing? This thing might have a lot of sellers in it and or coming into it, and there might not be enough buyers to prop it up. It just makes it a more exhausting, indecisive move. I really look at choppiness as an indicator for bottoming and topping as well. Going back to, what was it? Oh no, it was HCDI. I was mentioning earlier how it got choppy around a resistance area, and I know it was already choppy throughout the move, but now we're choppy and we got a lot of selling going on. So a lot of sellers are really coming in, and short sellers coming in and trying to push this lower. So I combine those factors, the volume, the price action, with a key level, me being up 10%, so I just lock in my gains in this case. But this one probably wasn't the best example since it's already a choppy play on, it'd be hard to recognize. Maybe SEV could be one lesson. Yeah. So here, it's clean. It's one-sided. Now, you have indecision going on. And from there, you just gotta kind of wait and see to see which direction it chooses. It ends up creating a key level right around the mid-8s. Because if we also look at the daily chart, it's got resistance, or, it's got a key level right around the 870s, mid-8s. From that one day, it's got a lot of volume that one day. So that makes it a key area. That's how we judge resistance, where the volume is. Where are we at? But yeah, so here, it's one-sided. Once we get near a key level, and it starts becoming having indecision in the play, you kind of got to see what the volume is. If it starts uptrending and giving some strong buying, we're going to start thinking of this area as a support area. But if we start seeing more selling come through and the trend starts heading lower, we're going to see that choppiness as a base, for a top. So not necessarily a base, more of a top. So yeah, it could mean basing, it could mean topping. You just kind of have to wait and see what the stock tells you to do, and you got to read the volume and the trend there. So when this shows, and you could also see it here, even when it's choppy, it's making lower highs each time. Let me zoom in some more, so you can really see it. Even though it is holding up, it taps the mid-8s and fails to really crack it for a little bit. It is still continuing the lower trend. And once it starts cracking the mid-8s, where it was holding right here, sellers get confident, buyers don't, and it starts heading lower. So, anything else? History. Yeah, a couple things. History is important because you could kind of get an idea of how the play might work out. For example, CYN here, not the best history. Very ugly, just downhill. Each pop is getting sold into. So on the first few days, when it's still holding up here, that's why we get this stuff, essentially. The history of the play is not enticing, and short sellers are excited about that, and they start trying to make it head lower. They see it's up a lot, a play that never really makes any moves like that. It's not part of the play, and in history, as you can see, it's kind of in your favor. Any pop that happens, short into it, because it's just going to fade. And then that's one aspect of how to approach history, just seeing how the play moves, how other people might approach it because of, I guess, air quotes, personality of a play. But you could also, like I said, judge resistance levels. And I really like resistance levels with volume. Here we got on the daily chart, while I was getting in it in the high ones, we got resistance here in the low 2s. And we're judging that resistance because what? We got volume. All these areas here, they could be resistance areas, like each pop that it has. But because there's no volume behind it, who are the bag holders? Think of that. That's why we really look at these areas of resistance more significantly if they have volume behind it. Because, people's eyes were there. There's bag holders that are, once it gets back to that area, they're grateful to be break even or close to it, or maybe finally profitable. So they might sell into it. And then short sellers are going to recognize that key area of resistance, and they'll start shorting into it as well. So you got to keep in mind where the key levels on the chart are with volume. See, after 4, I'm expecting next area, if it does break, it's going to have, see, I want to say 5, but not really. I really want to say the mid-6s, because that's where there really is volume. 5 might also hold because it is a key psychological level. So intraday short sellers and sellers will come into that area to sell. But on this chart, key areas really the low 2s and the 7, mid to high 6 area. That's where there's finally volume. There's bag holders. There's people eyeing it when it comes back to these areas. So that's how we approach history as well, using it as a guide to see what the personality of the play might be, as well as where it might run into trouble, where key areas are going to be of resistance and support. So next up, the one that I don't check the most, that's why I got it with the asterisks here. I should be checking it more. If you go to, I believe it was sec.edgar.com, I look up all my filings in there, just looking for dilution. And with dilution, companies pretty much add more supply. They add more shares to the pool already, and that completely changes the fundamentals, essentially, of the play, because now we're going to need a lot more volume to sustain those new shares. And keep in mind, these shares, when they come in, they're getting sold into. People are converting warrants and turning them to shares and dumping them to the open market, typically. And usually you'll see that in the SEC filings. And that's something that I personally have to work on a lot. Really looking at areas where there might be dilution. If it gets to that area, our warrant's going to be exercisable, and you're going to all of a sudden get a lot of selling out of nowhere on a chart that looks really good. So dilution is key. I'll make more videos on this later, as I also learn more about it and get into it and use it more. But these here, this is what makes me my money, essentially. That's what I really look at the most, and how I come to a conclusion with a play, a stock, and on what it's going to do. I just line my indicators up in a row, and if the odds are in my favor, things are checking out, I put the size accordingly and see what happens. So it really comes down to just supply and demand. If there's news, but even sometimes that's not significant. It's really supply and demand, the pattern, key levels and trend, the price action. That's why I am lately more of a technical trader, because I'm really just trading the chart. If there's any news, I assume it's going to be priced into it. So I don't understand half the news, if we're being honest, that comes out. For example, dogs. I don't know what happened here, but guess what? I could tell that it was probably not great news, just off the price action. So, pretty simple thinking. Might be something I adapt more to, and start looking more into the news and understanding it more, and looking more into the SEC filings and whatnot. But for now, I'm making money consistently trading the chart, and I just went over how I piece it all together. It is my first video kind of articulating this all in the video, so might not be my best work right now, but I'll definitely make more material like this that will be useful to anybody new or trying to see how we trade. But yeah, not to extend this video any longer, I just lined these up in a row, see if they check my boxes. I know some people have like a scoring system. I don't really care for that. Maybe something I use, but if we also go back to YouTube, I just had a video going over how to pick winning stocks. I go over CYN, SKYH, and VLON, comparing the three, going over essentially kind of what I'm looking at here. Maybe not as much in detail, but I go through my thought process with each one and why I end up trading CYN. So, yeah, I hope this was useful. If you have any questions, drop them below in the comment section. Give this a thumbs up and subscribe to our channel if you want more content like this. Besides that, check us out on Twitter. Hope I don't have the tab out right now. But Twitter, at Pack-a-Punch Traders. I'll be posting the watch list in a moment on there, and I'll be updating it in the morning. And, you know, just posting a lot of good material there. If you want low-cost live streaming and live trading to see us how we trade, check us out on tradecaster.com. We got a channel on there. Besides that, hope everyone had a great weekend, refreshed, studied up, and is ready to go to attack Monday strong.